Folks, the SpaceX IPO is shaping up to be one of the biggest IPOs in stock market history. And while everyone is asking how to buy SpaceX directly, smart money is already moving into SpaceX-adjacent stocks. In today's video, we're breaking down the entire SpaceX supply chain, every major category of supplier, where the money flows, and which public companies are positioned to benefit the most. Then, at the end, I'll give you one stock that I believe is still significantly undervalued despite having direct SpaceX exposure. And finally, we'll cover today's sponsored segment on Medicus Pharma, ticker symbol MDCX on the NASDAQ. As always, if you're the one taking the ultimate risk, you've got to be the one doing the ultimate research. Always do your own due diligence. There are two major themes you need to understand heading into the SpaceX IPO. Theme 1. Massive capital flood into space stocks. The first is simple. The SpaceX IPO is going to flood potentially trillions of dollars into the space sector over time. And that money doesn't just stop at SpaceX. You'll likely see more private space companies. IPO. Existing public space companies re-rate higher. New ETFs focused on space and aerospace. Institutional money flow aggressively into the sector. This has already started happening before the IPO. The second theme is even more important: story value. In the short term, Wall Street doesn't just buy fundamentals, it buys narratives. And Elon Musk is arguably the greatest narrative builder in modern business history. He combines real execution with a story that's even bigger than the execution itself. You need to understand the difference between fundamental value, story value. Because Wall Street makes enormous amounts of money on story value. Funds are not sitting there running perfect, discounted cash flow models. They're asking, what else can we own that benefits from SpaceX? That's why anything remotely connected to SpaceX is already getting bid up. Suppliers, competitors, satellite stocks, defense names, launch companies, even loosely related companies. That's how narrative cycles work. Sometimes stocks fall 70 to 80%. Even though the business barely deteriorates. Other times, entire sectors explode higher simply because one giant IPO creates a tidal wave of attention. You can ignore this dynamic, or you can understand it and position around it. But you need to know it exists. And here's the key. Most of these stocks will probably see an anticipatory run-up before the IPO, a post-IPO pullback as institutions take profits. Long-term separation, where actual fundamentals matter again. That's probably true for SpaceX itself, too. Now let's walk through the SpaceX supply chain and where the money actually flows. SpaceX is effectively three businesses. 4. Launch systems: Falcon 9, Falcon Heavy, Starship, Source, Starlink. Thousands of satellites in orbit. Defense and government systems: Starshield, military contracts, lunar missions. Each one requires a different supply chain. Category 1. Launch hardware. This includes everything needed to build rockets. That means aluminum lithium alloys, stainless steel, titanium, advanced composites, liquid oxygen, methane, rocket fuel systems. SpaceX is actually one of the largest industrial gas customers in North America. Industrial gas suppliers benefiting include Shatu Air Liquid, Shayua Linde, Praxair. Then you have specialty alloy manufacturers like Shias, ATI Inc. Haynes International. These companies supply the high-temperature metals used in engine bells and combustion chambers. Category 2. Satellite manufacturing. Starlink satellites contain thousands of components. Major areas include solar arrays. Redwire is a major player here. Propulsion systems. These are Hall-effect thrusters used to maneuver satellites, historically dominated by Aerojet Rocketdyne, but newer entrants include Phase 4, Orbion, star trackers, and attitude control. These systems help satellites know their orientation in space. Companies involved: Honeywell, Collins Aerospace, Redwire Radiation. Hardened chips, specialized semiconductors built to survive space radiation. Suppliers include BAE Systems, Microchip Technology, Texas Instruments, Inter-satellite laser links. This is how Starlink satellites communicate with one another. Rocket Lab recently acquired Mynaric, one of the leaders in this area. Category 3. Ground infrastructure. Satellite constellations require enormous ground infrastructure. Each Starlink gateway site includes high-power amplifiers, phased array antennas, RF filters, modems, fiber connectivity. One important supplier here is Filtronic. There are already over 150 Starlink gateway sites globally. Each costs millions of dollars to build. Category 4. Chips and compute. SpaceX is one of the most compute-intensive companies on Earth. You need chips for rocket guidance, re-entry systems, satellite onboard compute, ground signal processing. AI and networking beneficiaries include Taiwan Semiconductor Manufacturing, Amkor, Marvel, Analog Devices, Texas Instruments, Monolithic Power Systems. Category 5. Connectivity and customer hardware. The Starlink dish isn't just plastic. It's a sophisticated phased array antenna. It contains hundreds of transceivers, routers, power supplies, PCB substrates, custom connectors. SpaceX manufactures many components internally, but the supply chain is global. Category 6. Specialized materials. This category includes heat shield tiles, cryogenic insulation, thermal coatings, aerogel insulation, nickel alloys. Beneficiaries include Materion, Master Bond, specialty chemical firms. Category 7. Software, cybersecurity, and data. SpaceX runs on enormous amounts of software. That includes real-time guidance systems, constellation management software, cybersecurity, data routing systems. Potential beneficiaries include Palantir, Cloudflare, AWS. As Starshield military contracts expand, cybersecurity spending should rise significantly. Why this matters: when the SpaceX IPO finally launches, every one of these categories will receive analyst attention. You'll see. Wall Street reports, mainstream media coverage, new ETFs, massive institutional inflows, and the stocks with the clearest SpaceX exposure are likely to re-rate first. 5. SpaceX-adjacent stocks already re-rating. 5. Intuitive Machines, LUNR. Intuitive Machines builds lunar landers for NASA's Artemis program. Why it's running? It rides SpaceX rockets to the moon. Revenue guidance is exploding. Management guided for $900 million to $1 billion in 2026 revenue. That's nearly 5 times their 2025 revenue. They also have a backlog approaching $943 million. NASA lunar contracts. Defense awards. Most importantly, they expect positive adjusted EBITDA in 2026. NASA's recent $20 billion moonbase initiative is also a major tailwind. 4. AST SpaceMobile. ASTS SpaceMobile is building a satellite-based cellular broadband network that connects directly to ordinary smartphones. No satellite phone required. Their revenue grew from $4.4 million in 2024 to $20.9 million in 2025. That's roughly 1,500% growth. They're guiding for $150 million to $200 million in 2026 revenue, $1.2 billion in contracted revenue. Partners include AT&T, Verizon, Vodafone, Orange, C1 Telus. The narrative here is extremely powerful. 3. Planet Labs. Planet Labs operates the world's largest Earth imaging satellite fleet. They image the entire Earth every day. Fiscal 2026 results. Sector revenue, $307.7 million. Growth, 26% year-over-year. Backlog, $900 million. They've also achieved 4 consecutive quarters of adjusted EBITDA profitability. 98% recurring revenue. That recurring revenue profile makes the business look much more software-like. And importantly, Planet launches satellites using SpaceX Falcon 9 rockets. 2. Filtronic. FTC/FTCLF. Filtronic is a British company making high-power E-band amplifiers for Starlink ground stations. Without these chips, Starlink infrastructure doesn't function properly, and SpaceX has become deeply involved with the company. Important details. Strategic partnership signed in April 2024. Expanded in March 2025. SpaceX holds warrants for up to 15% ownership. Roughly 10% already vested. In August 2025, Filtronic signed its largest contract ever. £47.3 million with SpaceX. Roughly $62.5 million for next-generation E-band products. 1. Rocket Lab. RKLB. Rocket Lab is probably the closest public comparison to SpaceX. They build electron launch rockets. Neutron reusable rockets. Neutron is designed to compete directly with Falcon 9. Recent numbers. Revenue, $62 million. Growth, 38% year-over-year. Backlog, $1.85 billion. They also acquired Mynaric for laser communication systems and recently announced a Meta-related space partnership. The stock, I believe, is still undervalued. Redwire. Now let's get to the main opportunity. The stock, I believe, is still materially undervalued compared to the rest of the sector. Redwire Corporation, RDW. Redwire builds ROSA technology. ROSA stands for Rollout Solar Array. Traditional satellite solar arrays are bulky and mechanical. ROSA works differently. It rolls up like a yoga mat, launches compactly, and then unfolds itself in space without motors. That means lower weight, lower complexity, greater efficiency. Now here's the key connection. Redwire's ROSA systems have flown on multiple SpaceX Dragon missions to the International Space Station, including SpaceX-22, SpaceX-26, SpaceX-28. Their solar arrays are literally helping power portions of the ISS. But Redwire does far more than solar arrays. They also build star trackers, sun sensors, antennas, RF payloads, deployable structures, drones. Additional catalysts include cameras used on Artemis Orion missions, European Space Agency quantum communications contracts, solar arrays for Axiom Space, U.S. Navy and Marine Corps drone orders. The company has around 1,300 employees across the U.S. and Europe. Now, compare the valuation. Approximate trailing revenue multiples. Rocket Lab, 75 times. Planet Labs, 43 times. Intuitive Machines, 14 times. AST SpaceMobile, 350 times. Redwire, roughly 5.5 times. That's a massive disconnect. Redwire has real SpaceX exposure, defense exposure, Artemis exposure, growing backlog, 41% projected revenue growth, yet it still trades in the lower half of its 52-week range. So if capital rotates aggressively into SpaceX-adjacent stocks during the IPO cycle, it's difficult to argue Redwire won't eventually re-rate much higher. That's the asymmetric setup I see. Sponsored segment, Medicus Pharma, NASDAQ MDCX. Now let's move to today's sponsored segment. Medicus Pharma is developing what could become one of the first microneedle-delivered chemotherapy approaches for basal cell carcinoma. Basal cell carcinoma is, SCHUTZ, the most common skin cancer. The most common cancer overall in the United States. An estimated 3.6 million cases are diagnosed annually. Nearly 1 in 5 Americans develop it during their lifetime. The standard treatment today is Mohs surgery. While effective, it can leave visible scarring, especially on the face, nose, eyelids that creates a significant unmet medical need. SkinJect technology, Medicus developed SkinJect. It's a dissolvable microneedle patch loaded with doxorubicin chemotherapy. The patch applies directly to the tumor, delivers treatment locally, avoids systemic chemotherapy exposure, potentially avoids surgery entirely. Clinical data, Phase 1. Completed in March 2021. Results: primary safety endpoint achieved. No dose-limiting toxicities. No serious adverse events. 6 of 13 patients achieved complete responses. Phase 2. Randomized. Double-blind. Placebo-controlled. Conducted across 9 U.S. clinical sites. Enrollment completed in December 2025. Top-line results released March 2026 showed 73% clinical clearance, 40% histological clearance, 80% overall response rate, compared to 38% clinical clearance in the control arm. The company expects a full clinical study report in Q2 2026. Regulatory progress. Important developments include FDA support for the 505(b)(2) pathway, planned end of Phase 2, FDA meeting in 2026, collaboration with the Gorlin Syndrome Alliance, international expansion into the UK and UAE, application under the FDA Commissioner's National Priority Voucher Program, second pipeline asset. In September 2025, Medicus acquired Antev Limited. Antev is developing Tevarelix, a next-generation GnRH antagonist for advanced prostate cancer. Why this matters? Current androgen deprivation therapies can increase cardiovascular risk. Tevarelix is designed to suppress testosterone rapidly, avoid the initial hormone surge, potentially improve cardiovascular safety. The FDA has already cleared a Phase 2b study. Important risks. This is still a very small-cap biotech company. That means no approved products yet. No established revenue streams. Clinical trials can fail. Regulatory approval is never guaranteed. So if you're interested, make sure you read the SEC filings and do your own due diligence. Outro. Anyways, that wraps up today's video. The key takeaway is this. The SpaceX IPO is not just about SpaceX. It's about the entire ecosystem surrounding it. And in markets driven by both fundamentals and narrative momentum, understanding the supply chain can create major opportunities. Have a great rest of your day, and I'll see you next time.